Moving average. In technical analysis, the moving average is an indicator used to represent the average closing price of the market over a specified period of time. Traders often use of moving averages as it can be a good indication of current market trend. As an example, if the current price is above the moving average, it indicates an uptrend and traders is advised to focus on taking a long trades. And if the current price is below the moving average, it indicates a downtrend and traders is advised to focus on taking a short trades. Bollinger Band. Bollinger Band are a form of technical analysis that traders use to measure a market's volatility and identify overbought or oversold conditions. This will help traders to determine when to enter or exit a position from the market. MACD Oscillator. The MACD is a trend following momentum indicator that shows the relationship between two moving averages of an instrument price. It is often used by traders to determine bullish or bearish momentum is high, allowing them to determine entry and exit points in the market. RSI. The Relative Strength Index indicator is most typically used to determine whether a market is in overbought or oversold condition. When the RSI indicator is at 70, it indicates an overbought condition, and when it's in 30, it indicates oversold condition. Stochastic Oscillator. The stochastic oscillator is a popular trading indicator used to determine the strength of a market momentum. When the stochastic oscillator is above 80, the market is in overbought, and when the stochastic oscillator is below 20, the market is oversold. ATR. The average true range is one of the most popular and widely used technical analysis indicator. It shows how much the price of an instrument has been moving over a period of time. In other words, it shows the volatility of a particular market. Unlike numerous other technical indicators, the ATR does not indicate the market's trend direction but only measures the volatility of the market. Traders often use the ATR indicator to place their stop loss. To calculate the stop loss, traders can take the entry price minus the ATR value for long position. Similarly, traders can take the entry price plus the ATR value for short position. Pivot point. A pivot point is an area to determine potential reversal points by using a formula to calculate the levels of support and resistance where usually reversal take place from bullish to bearish or bearish to bullish. Fibonacci retracement. Fibonacci retracement are used to determine significant support and resistance level. It is used to identify the next probable retracement level when a market successfully creates a swing high and a swing low. It is placed on both the peaks and bottoms to identify the next possible retracement level.